Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 25th, 2025, and we are taking a close look at the Australian dollar versus the US dollar, or AUDUSD. This pair has seen some significant volatility recently, and it's currently sitting at a critical technical and fundamental crossroads. We'll start by covering the major news events driving the price before diving into a multi-timeframe chart analysis to see what the technicals are telling us. The biggest story right now is the dramatic shift in expectations for the U.S. Federal Reserve. Dovish comments from New York Fed President John Williams and Fed Governor Christopher Waller have shocked the market, pushing the implied probability of a December rate cut all the way up to 80%. This sudden dovish pivot has halted the relentless rally in the US dollar, providing some much-needed support for risk-sensitive currencies like the Aussie. However, the main event for AUDUSD this week is undoubtedly Australia's monthly CPI data, set to be released this Wednesday. This will be the first of a new monthly series and will be a crucial indicator for the Reserve Bank of Australia's future policy decisions. A hot inflation print could diminish the chances of any RBA rate cuts and provide a significant boost to the AUD. Conversely, a soft number could revive those easing expectations and put immediate pressure back on the pair. We also have to be mindful that Thursday is US Thanksgiving, which will lead to very low liquidity and potentially erratic price movements. Now, let's look at the daily chart to get the big picture. As you can see, AUDUSD has been in a pronounced downtrend since hitting highs near 0.6940 back in late September 2024. After finding a bottom around 0.6140 in January of this year, we saw a recovery, but the downtrend resumed in mid-2025. The price has been making a series of lower highs and lower lows, which is the classic definition of a bearish trend. However, things have gotten very interesting in the last couple of weeks. Let's zoom in on the price action since August to get a clearer view of the current situation. The selling pressure accelerated through October and into November, culminating in a low last week around 0.6418. This is a critical area that analysts have highlighted as a major support zone, roughly between 0.6440 and 0.6420. We can see on the chart that price has bounced off this level multiple times since August, making it a very strong floor. The recent dovish Fed commentary is what appears to have triggered this latest bounce from that key support. The question now is whether this is just a temporary relief rally in a larger downtrend, or the beginning of a more significant reversal. To understand the short-term battle, let's move to the 15-minute chart for the most recent price action. Here we can see the price action from the end of last week. Notice the sharp dip on November 20th down to that key 0.6440 area, followed by a struggle to regain footing. On Monday, the 24th, the price action was choppy, trading in a tight range mostly between 0.6450 and 0.6465. This price level around 0.6460 is very significant, as it corresponds with the 200-day moving average, a key long-term indicator. The price action here shows a clear battle between buyers trying to defend the support floor and sellers trying to push it back down. This consolidation sets the stage for a potentially explosive move once a direction is chosen. Now, let's bring it all together and discuss potential scenarios going forward, switching back to our zoomed-in daily chart. We have a fundamental catalyst in the dovish Fed and a technical catalyst with the bounce off major support. For the bulls, the case is building. If tomorrow's Australian CPI comes in hotter than expected, it could provide the fuel needed to break higher. The first key level bulls need to conquer is the resistance zone between 0.6475 and 0.6485. A convincing daily close above this area would be a strong bullish signal, suggesting the recent low is in. From there, the next upside target would be around 0.6520. A more substantial rally could target the 0.6620 to 0.6630 region, which has acted as significant resistance in the past. On the other hand, the bearish case remains very much alive as the long-term trend is still down. If the Australian CPI print is weaker than anticipated, it could quickly erase the recent optimism. This would give sellers the ammunition to attack that critical support zone at 0.6440 to 0.6420 again. A sustained break and a daily close below 0.6415 would invalidate the near-term bullish structure. Such a move would signal that the downtrend is resuming with force. In that scenario, the next major downside target would be the psychologically important 0.6300 level. So, to recap the key takeaways for AUDUSD. The entire market is hinging on the upcoming Australian CPI data tomorrow. This is the most important catalyst to watch. The critical support level to defend is the 0.6440 to 0.6420 zone. As long as we remain above it, a recovery is the base case scenario, with about a 60% probability given the dovish Fed shift. The key upside trigger is a break above the resistance at 0.6485. Conversely, a break below 0.6415 would flip the script entirely, making a move towards 0.6300 highly likely. Remember to be cautious on Thursday due to the low liquidity from the US holiday. This could lead to exaggerated moves on any surprising headlines. Finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and consult with a qualified financial professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.